Hi, I'm Mike Swanson. Welcome to our webinar today, Protecting Your Law Firm from Fraud. And today's webinar is brought to you by Advocate Capital. I am the president and CEO of Advocate Capital, and we are the provider of the AvloTrack case expense funding service for nearly 500 law firms all across the United States. I'm also the author of How David Beats Goliath, Access to Capital for Contingent Fee Law Firms. It's the only published book ever published to help plaintiffs, lawyers understand the financial markets. So joining us today is our special guest. Once again, I'd like to welcome back to him to our webinar series. And joining us is Tim McKey, and he should be appearing shortly. Tim, are you there?
I'm trying.
Hey, Tim, how are you? Welcome back.
I'm getting you.
Yeah, how are things in Baton Rouge? Hot like here in Nashville?
Hot and humid, but the way it's supposed to be, I think, in South Louisiana.
Yeah, so now we both have 6 months or so of 92-degree summer days, so that's okay though. I like it here. Fantastic. Well, Tim, thanks for joining us again. Tim is a CPA. Tim is also the co-founder of Vista Consulting, which is a nationwide consulting group that helps law firms like yours navigate the business matters of the law firm even better. And Tim is back. Tim, a few months ago, you joined us for a webinar on the proper tax treatment of case expenses for law firms. And boy, that was the most popular webinar we've ever had in the history of our webinar series. So thanks for doing that for us. And it's now available on video. So if you wanted to, if you're watching that and you haven't watching this and you haven't seen that yet, visit advocatecapital.com, click the videos link and scroll to the bottom where you can find all of our webinars, including that webinar. So before we get started with our content today, I have a disclaimer, of course. This webinar is for informational purposes. So it's not intended to provide and should not be relied upon for tax, legal, or accounting advice. You should always consult your own tax, legal, and accounting professionals and advisors before taking any actions. But feel free to share this webinar with them, because you'll be receiving a link to a video of this webinar, so it's easy to share in case there are ideas here you want to discuss with your professionals. Well, Tim and I had a meeting to prepare for today's presentation, and during that meeting, as we were talking about fraud at law firms, Tim shared that he thinks there are 3 types of people generally when it comes to employees, and there are those who will never steal, right, Tim? Those who will always attempt to steal, and those who will steal if you make it easy. So today's webinar can't protect you from the first person. They're always going to try to steal. In fact, they always will steal. And we'll show you some ways to try to catch them if that's happening at your law firm. But if someone's attempting, you want to prevent that by making certain changes in your procedures and also not making it easy for them to do so. So we're going to talk about 5 different types of fraud. These aren't the only ways fraud can occur at a law firm. These are just the 5 we'll cover today. One would be credit cards. So if an employee is using credit cards for personal business, for personal use, buying things on Amazon, whatever it might be, buying gifts for family members. We'll also talk about fraud by employees cashing checks or writing checks to themselves or family members or friends. We'll also talk about fake vendors. Fake vendors that could already be in your system, ways to prevent and watch for that. We'll talk about falsifying bank loans. We've seen that happen before. And then lastly, we have seen where associate lawyers, employee lawyers at a law firm have taken cases that belong to the law firm and prosecuted them on their own as the attorney of record. So we're just going to highlight those 5 today and talk about them. There are other ways. Those are some of the most common types that we see. So we're going to talk first about some prevention ideas, but then also, if you've not been preventing them, ways to start monitoring, and if something wrong is happening, to try to catch that. Then lastly, we'll talk about the impact and why this is an important topic for you, your family, and your employees. So first, let's talk about the first wave of prevention, or the first line of prevention, Tim, and that has to do with hiring. Can you share with us on that?
No, absolutely. Yeah, again, we want to hire those people. If going back to those 3 types, we want to attempt to hire the person who is, honest, moral, ethical, all those type things, who would never ever do anything dishonest and try to take anything unethically from your business. And the first way to do that is hire the right people. Now, we know that we're never going to bat 1,000 on that, but there are some things that can be done to attempt to hire the right fit, the right type person into the firm. We believe, definitely in a strong interview process, which includes background checks, especially if someone is going to be handling checks or funds. I'll just say in the accounting department, credit check even can be appropriate. You don't want someone that you find out has really bad credit or real bad debt situations going into your accounting department. It's just obviously is an incentive to possibly do something untoward there. The other, again, in the hiring process is even aptitude type testing, personality tests. We like all of those type things. And again, none of this is really a foolproof method, but it gives you a tool. It gives you an idea of the type person that you're interviewing and then potentially hiring. We've also been known to Facebook stalk people.
Yeah.
Look them up on social media, see what they're putting out there, and that type thing. So
yeah, that's a good point on the background check, and we're not going to recommend any particular company today, but there are plenty of them out there that you can certainly Google employee background checks. Of course, the applicant fills out a form, gives you authorization to do that. And we do that here at Advocate. We want to make sure we're not bringing people with criminal past into the organization in any role. But as you mentioned, Tim, especially in an accounting role, if someone's coming in with, they're up to here in financial problems, that's not the kind of person you want handling your checkbook, right?
No, absolutely. And again, it's a tool. And if you suspect anything, if you see anything through these background checks and hiring process, and the person still, has all the qualifications, and I just want to make clear that we're not saying you should necessarily remove that person from consideration, but you should certainly have a conversation about these things. We believe in total transparency, again, and especially in the accounting areas. It's going to be handling checks, recording payables, and things like that.
Sure. And I know some people actually advocate for doing background checks annually, of course, with the full knowledge and permission of the employees. But I know that in some organizations, especially when there's a lot of cash flowing through the organization, they will do background checks on an annual basis on the employees that are touching cash. So that's
Absolutely.
something.
And I might have said this at the very beginning, but I want to revisit it. Reference checks also are very important, not just third-party independent background checks, but checking where the candidate worked before, talk to their direct supervisors. And we have some methodology that we use to actually do that and get a really good check, because sometimes people don't tell you a lot when you call them.
Right.
It's kind of name, rank, and serial number, but there are some methodologies you can use to get around that better.
Right. And then the other thing I like to do in hiring is look for gaps in employment history. If there's a 6-month period, 5-month period, year period with a gap, there needs to be a good explanation there, because maybe something went wrong and they just left that employer off the resume. So that's something to look for as well. Great. Well,
totally agree.
Let's move on. Let's move on to another prevention topic generally, which is separation of duties. So before we get into detail, can you just briefly explain an overview of what separation of duties means?
Sure. There are some duties, again, within accounting departments that, if at all possible, should not be performed by the same person. Again, if that person is totally honest and was one of those that will never do anything, that's fine. But if at all possible, we don't want to make it easy for someone to take the advantage, if you will. So someone, for example, who writes the checks should not be the same person that reconciles the bank statements. The person who
let's get into some specifics on that. Let's talk first about ways to prevent credit card fraud at the law firm. And you started to mention part of that. So could you talk about separation of duties with regard to credit cards?
Certainly, absolutely. And again, it's fairly simple. I mean, if your employees have access to company credit cards, the person who reviews the actual charges that hits the card. Number one, they should be getting receipts or tickets, if you will, from the other team members. But if they're using a credit card, the person in accounting, someone else should absolutely review the credit card statements. And I'll use our firm, for instance. We have consultants that have company credit cards. The master account is held by me. So that credit card statement actually comes to me, and I briefly kind of scan each person's name and say, okay, is that reasonable? So that's a very good internal control. If there's something that jumps out at me, and especially if it's a material amount, obviously the bigger the numbers, that get more attention, but it should be scrutinized. And again, that's a separation of duties criteria.
Right. So for a law firm owner who might be watching this, I think you'd agree with me that the law firm owner should be the one opening that credit card statement, right?
The law firm owner, if at all possible, and if that's not possible for whatever reason, just not someone that's in the accounting department. Lots of times we have administrators that are not in the accounting department, COOs, for example, that should review those statements if it's not done by the actual owner. Owner's better because they're always going to be more diligent.
You bet. Yeah, I open our credit card statements here at Advocate because I want to see what's happening.
Right.
Fantastic. So the person in charge of making the charges shouldn't be the one reconciling. So you have kind of your employees kind of watching over each other, that's a preventive, right? Because it would require two.
Absolutely. But I do want to point out something here too. In this situation, and in probably 4 of the other ones we're going to talk about, that separation of duties doesn't necessarily ensure that something won't go wrong, but what it does do is it requires that there is collusion. And most thefts, if you will, are singular events. You know, if people are getting together and colluding to do something immoral, illegal, unethical, it's much more difficult to catch. So we want to make it as difficult as possible and to create a situation where there would have to be collusion.
Got it.
So that's kind of the part that I hope came across.
Well, similarly, let's talk about the checking account, the operating account, the IOLTA account. How might separation of duties be used to make it more difficult for someone to be playing with the law firm's checking accounts?
Yeah, if say the accounting person was actually writing checks either to themselves or maybe they're paying personal bills, when the actual bank statement comes in, someone should review that. And then the person that actually writes the checks generally should not be the person that codes it into your accounting system.
Okay.
And another separation of duties, and someone, again, other than the person writing the checks, should be scrutinizing the propriety of those expenses. One thing here too is generally we do not like to see the person writing the checks actually have signature on the account. So that's a big no-no. We would, again, in a perfect world, we want the owners to have signature, but I have actually seen owners, look away and sign. And we don't advise that, obviously. They should absolutely scrutinize what they're signing, make sure there's support for it, and that support is reasonable.
Mm-hmm. Yeah, absolutely. Checks of any size here at Advocate, I actually sign them myself, and the accounting team brings them to me. And once in a while, I'll ask, "Can I see a copy of something?" or ask a question about it. So fantastic. Okay, let's talk a little bit about. When it comes to vendors, what kind of things can a law firm owner do to prevent kind of a fraudulent vendor situation?
Yeah, absolutely. This is something that we've seen where the accounting department, again, I'm zooming in on them, obviously, because they're the ones that have access, have set up a vendor that is basically, it was one of their personal accounts, if you will. And when owners are not paying attention to what they're signing, then that check is going to XYZ, which is not a vendor of the law firm. What we like to see is if it hasn't been done lately, for the owner to actually, or again, someone else, the COO, a supervisor, review the vendor list out of their accounting system.
Right.
who is on that list? Are these reasonable? You know, if you see a cleaners on there, for example, you know, that's probably not something that the law firm is going to utilize over and over. And again, that's just an example. And if there is a new vendor that needs to be set up in the accounting system, we prefer that there is a discussion between the accountant who actually does it and a supervisor or owner. Hey, we've got a new vendor. Yeah, that makes sense. We're going to put them on the list. So a discussion there to, again, for the owner to keep involved, if you will, with the accounting procedure, is because that also tells the accountant somebody's watching, and that's extremely important.
Absolutely. And, you know, for the type of person you mentioned who's always going to try to steal from you, I mean, they'll create a vendor that looks like a real vendor, right? They're not going to put necessarily the local restaurant on there. They're going to say ABC Trial Consultants or, you know, something that looks relevant to the law firm. So you have to dig kind of deep sometimes and really question that. So, yeah, very good. Fantastic. What about when it comes to loans and loan requests? What kind of things have you seen? I know I've seen a few things.
You've probably seen more of these than me, but what I have seen is, you know, paralegals, legal assistants, and sometimes are responsible for paying bills that are case costs. And if they, you know, and some companies use firms like Advocate Capital to actually borrow the money to do that, and they can make fraudulent loan requests and then divert that money. A little bit tougher to catch, but generally the attorneys and the paralegals are well aware of that, and the accounting side of that gets the statements from the actual lenders. So they should review those statements and make sure that costs are going on ledgers in the case management system, and they're tying into the accounting system, and there's adequate approval by the attorney or paralegal, whatever the particular system is. And the systems can vary a little bit between firms depending on numbers of people, you know, and how it works and what can be the most efficient and effective. But always internal control should be considered in the loan requests.
Yeah, I think the loan requests can be almost worse than stealing cash, because they're stealing cash that wasn't really there. So they're leaving behind a debt owed by the law firm rather than just stealing cash that actually was even there, and it creates a deeper hole for the law firm. So we have a special view on this particular topic, and we do allow our clients, the guarantors at law firms, to delegate the authority to make loan advance requests to employees, but they have to do that for us in writing, and they have to fill out a absolution waiver form where they acknowledge that they are, you know, delegating this very sensitive topic and, you know, absolving us of liability on it, because it's not something we take lightly. It's something very, very important, because you're giving your employee access to essentially the ability to borrow you into a hole. So you need to be very careful. I also recommend that at least once a year, but I would do it monthly, compare your bank loan statement or your advocate statement to your balance sheet and make sure that the debt on the balance sheet matches your loan balance. You want to make sure that you think you owe the right amount of money that your lender thinks you owe, and that's something to be looking at as well.
I agree with that 100%. I'll take it even one step further. Someone should do the same thing with the reconciled cash balance from their bank statement at the end of the month to assure that it ties to your balance sheet as well.
Yep, absolutely, absolutely. Great. Well, the last type of fraud we're going to talk about today is stealing cases, is what we're calling it. It's not a very elegant term, but we know that happens sometimes. What have you seen out there?
Yeah, and we had an interesting discussion last week when we were batting these ideas around. What we saw was a lawyer actually got a referral to himself through the firm. It came to him, but he did not actually put it on the law firm's books. He actually referred it to another lawyer, and he and that lawyer began working it outside of the firm. And those things can be very difficult to catch, if you will, to discover. What happened in this particular case was a piece of mail came to the law firm, and the paralegal didn't recognize the name of the case. and brought it to the accounting department and said, do you guys recognize this? And it kind of blew up from there. Hey, this is not ours. What's going on? It's got this particular person's name on it, but it's not in our books and records. So difficult to discover, but again, it's an unethical behavior that needs to be watched. And again, a little bit tough, if you will, to discover. There are some things you can do, but I think you had brought up, can you actually go to the courthouse and review the cases that are filed with the firm's name on them? Yes, that is a way to do that. A little bit cumbersome, but probably should be done annually as part of an annual internal control process.
Yeah, I agree. And in terms of prevention on that, one idea I'd like to share, which is to be very, very upfront with your employee attorneys, your associate attorneys, and maybe even your law firm partner as far as what is permitted, right? So be very clear in terms of expectations. Know who owns the cases when they walk in the door. Be very explicit about that. You might even want to have that part of the employment agreement. What are the permitted attorney-client contracts to be used with clients, because you don't want them slipping an agreement in there that you haven't pre-approved that maybe mentions them rather than their law firm. And then lastly, I think expressly in their employment agreement not permitting this, just expressly addressing the issue rather than assuming that they know this. Have them sign off on the fact that they acknowledge that any cases that come in belong to the law firm and not to them. So those are some things to think about. Doesn't really prevent it, but at least gets them on record, gets them on notice, so they can't say later, oh, I thought that was okay. Oh, I thought that was a case we probably wouldn't want at the law firm, so I took it myself, things like that. So if they're going to take a case on their own that should belong to the law firm, they should have to approach you as a law firm owner and ask for permission and get written permission to do that. So those are some of the ways that you can prevent someone from accidentally assuming that the case was okay for them to take. All right.
I agree, Michael. And to go back again to those three types of people, this is something that absolutely is intentional. It's not that it's easy. In fact, it's not easy. It's a very intentional act and should be taken extremely seriously if that happens. It wasn't just somebody left $10 laying around. You know, this was a planned activity, if you will.
Right. And I think that your chances of success in pursuing any kind of civil action against an attorney that does this is going to be a lot better if they've already agreed in writing that it's not permitted. I think you're going to have more of a leg to stand on and more negotiating room with them. So as we've talked about, though, Tim, all these kind of ideas under the heading of prevention can't stop someone who really wants to steal from you. There are ways to slow them down, make it harder, put make them have to collude against you as a law firm. So let's talk a little bit more about detecting problems, because if you're watching this webinar, maybe you've not done any of this yet. You've not taken any of these preventive measures yet, but starting today, you want to start looking and trying to detect these things if they are going on. So let's switch to that, a little bit more surveillance topics, Tim. And so this first one is about opening, reviewing the various statements, credit card, bank, and load statements, and what kind of things should a law firm owner do when they do that?
And this is actually a very simple approach, but it can be somewhat time consuming. And again, the law firm owner is probably the preferable person to actually open the bank statement, open the credit card statements and the loan statements, and review them quickly for propriety of, hey, does anything just look odd? And especially looking at the bigger charges, the bigger checks, and those type of transactions that you can see on those statements. That's one quick way. The other way, or another way, which is related, is sometimes to even monthly or quarterly to arbitrarily pick a check or a credit card charge and go to the accountant and say, provide me all of the backup you have on this. Tell me about it. How was it coded into your accounting system? Once again, what that does is just simply lets the accounting department know that there are internal controls and people are watching. And a little bit of an aside here, you know, the ethical, moral people, which are in my belief, are most people, but in the accounting department especially, they actually welcome these procedures. They know that it protects the firm and it protects them. If something does come up that is not something that they did, these procedures will actually protect them too, because someone is actually watching. The good ones, they appreciate and understand internal controls. They don't take it as a personal offense. And again, that's something that we hire for, and we talk about that.
Especially in the accounting profession, they understand this is just prudent things to be doing. So yeah, so spot checking all these things, I think, not only makes it a little more difficult and preventive, but the idea here is to try to, if it's happening, to try to spot it and try to find it. And it does take a little time to do that. So let's talk about another one, which is financial statements. How can you use your financial statements to detect potential fraud?
Obviously, reviewing the financial statements, and I'll just talk about the profit and loss statement for a second. Looking at your expense accounts, and if things look out of, bigger than they should be, then maybe there's a question that just comes up. What we like to see with any business, law firms again in particular, we like to see the firms actually prepare a budget. And when I use the word budget, I don't mean that we're setting line items on the financial and we're not going to spend any more than X on office supplies or whatever it is. What I mean is that we are projecting what we think that monthly expense is going to be.
Okay.
And based on, good place to start is what did we spend in the prior years, and what do we think is going to be happening in future years, projecting what these line items will be. And then monthly, simply looking at what our term for it is budget to actual. This is what we thought was going to happen. This is what actually happened. And here's our delta. Here's our variance. And if those variances are material, and let's just say that or the law firm owner knows that, hey, we made a conscious decision to spend more on advertising, or we did a mailer that we didn't contemplate, so our mailing expense or our postage or shipping expense is higher, and you know what it is, and you know why the variance is there, then that's great. But where there can be a real problem sometimes, and I call it management 101, is when we budgeted a number, the actual number is materially different, and we don't know why. And that is just a signal that we need to dig into that and understand what went on. And again, it's not often, but sometimes we find that there can be theft involved in there. It's not what we thought, and they were coding things to this, and the accountants were coding things to this particular line item, and it got blown up. And again, with all the other things we've talked about, this is just kind of an after the fact check, if you will. But we think it's very important. And one last thing on budgeting, it's a little bit off the topic of fraud, but we have never, ever worked with a firm or business that when they implemented a budget did not learn something. Just by going through the process of budgeting, saying this is what we did last year, this is what we think. And by the way, let's look at budget to actual. It seems that there's always something that's learned there.
You bet, absolutely. Like, oh, this vendor increased their prices 15% a year for the past 3 years. How is that happening, right? Or things like that. So I agree with you. So yeah, we do something very similar. We do look at current month to budget for the month. We also like to look at on a line item basis year to date versus last year to date for every line. I'm looking at that every month to see why are there variances. If it goes down, I'm happy, but if it goes up, because what can happen is if they're taking fake loan requests, but they're not reflecting, well, first of all, if your balance sheet number on your loan balance matches what the bank says, great. If your cash balance in the balance sheet matches what your bank says you have in the cash, that's great. So one way for employees to hide theft is to write these checks, but then code them in the accounting system as some legitimate expense like rent or any other legitimate expense. And so that you might not see that until you start comparing those financial statements and say, why is rent up 20%, right? And then you want to dig deep into that and see if all those checks coded to rent were actually paid for rent, or if there's a check in there that was written to somebody else. So that's kind of the concept on that.
Absolutely. Part of the role of generally of outside accountants or accountants in general is to be skeptical. Again, you have to kind of prove it. Accounting is pretty much a black and white profession, if you will. It's either right or it's not.
Yeah, absolutely. So those are some ways you can use your financial statements. And by the way, if you're a plaintiff lawyer watching this, you probably don't have a degree in accounting or finance, and that's okay. You know, you're in this line of work to help people, but paying attention to these details is important. So get help. You know, if you're just paying your CPA to do your taxes every year, that's all they're going to do. So sit down and have a conversation with them about these topics and what can they do to help you. It won't cost that much, but once a month, maybe they sit down and show you what it means year to date versus last year to date, because you might not even know where to start with something like that. So get some professional help. I like the next one. I like this car. Looking for problems, watch for changes in the bookkeeper's lifestyle. So if you're paying your bookkeeper $25,000 and they drive up one day in a new Camaro, you might want to
maybe they hit the lottery, but
maybe they hit the lottery. Maybe could be. Maybe they didn't save their money. It's not.
Maybe not. It's worth a question. It's worth you know, again, the antennas going out, being skeptical and looking.
And this happens all the time when you read about the news accounts of employee fraud, and they'll say this person had been going on trips to Europe and had a brand new car and bought a big house. You know, if this is happening, get skeptical and start digging into your accounting system to see what's going on there. The other thing, sadly, that happens sometimes is a change of life events, right? So bad things happen to good people. We know that in this business, and there have been cases where, for example, a bookkeeper starts dating a person who turns out to be a drug addict, an abusive person, and ends up threatening the bookkeeper that this person is going to go after their family or their children if they don't agree to steal. So, you know, people get coerced into doing things they wouldn't normally do. So, you know, watch for changes, serious life changes, as well as potential clues that you should be looking more closely. So when it comes to fake vendors, Tim, we've been talking about that a little bit in preventive, but finding them, like you said, once a year, look at the vendor list, right?
Look at the vendor list, and if there's if there's going to be a new ongoing vendor, then someone other than just the accounting department needs to know about that. Mm-hmm. So that and verify that it is a real vendor. I mean, if the name doesn't look right, if it's not spelled exactly right, those kind of things can make a difference. And it has to be some diligent work. Again, this is a skeptical process, guys. You know, we're not saying that your bookkeeper is doing one thing, and we don't want to go in and be overly suspicious. But you know, we've seen relatives. We've seen significant others that have done these things, and it's more prevalent than we think. And lots of times, it's people that are closer to you than you think. Yep. Again, good business is good business, no matter what the relationships. A lot of trust, but a good system is what we propose.
It's almost always someone close and someone that you trust and have known for 20 years. It seems like the norm, right? And that's how they get away with that. So one of the things that we've also heard about is fake vendors that look real. So it could be the name of a real company, but the employee creates invoices, either invoices with a fake address, it's a PO box that actually is controlled by the employee, or they will set up a vendor that just looks real. So you know, if you have a suspicious vendor, now Google's great. Just Google them, see if the address when you Google them matches the address on your invoices. That they're not creating fake addresses.
Absolutely, that should happen when a new vendor is set up. You should actually Google them, look at the website, see if they're a real business.
Make sure they're remit to you. The other thing we have seen, this is not an employee issue, but you know, I from time to time will get an invoice from some kind of scam artist, and they make it look like a real invoice for like an ad maybe we might have run or something, and say, you know, your bill's past due, please pay us $132. And I know what it is. It's a complete bogus and fake invoice. But if you're not catching those as the owner, your employees might be falling prey to those kinds of fraudulent schemes by outsiders. So keep an eye on vendors. The vendor list can be a problem. Then lastly, in terms of detecting whether or not one of your employee lawyers is taking cases on their own, one idea that we like to share is to do an do an online check with your courts. You know where most of your cases are. Once a year maybe, do a check on your employee lawyer's name to see if they're the attorney of record as an individual lawyer on any cases. Actually, nowadays, it's not that hard to do because most court systems are online. Have you seen that happening before, where an employee takes a case, Tim?
I have actually seen that before, and it's not a pleasant thing to discover, because
Yeah.
usually it's very far down the road when it comes up. And to unwind that and have to explain to clients, and you
Right.
certainly want to attempt to keep that private, because it can affect the reputation of the law firm, which is precious. It is
Right.
really the most precious asset the firm has is its reputation.
Well, let's talk a little bit more about implications and why this topic is important. It's not exciting, unless it happens to you, then it's exciting in the wrong way.
In the
But
wrong way.
this is not a law firm marketing webinar, right? Those get plenty of attendance, but fraud prevention isn't all that maybe exciting to you, but it can be absolutely devastating. So Tim, what are some of the effects on the law firm owner that you've seen when fraud occurs?
Yeah, oh my gosh, the one that is obviously the most prevalent is his profit is affected.
Right.
So therefore, his lifestyle can be affected. He may be unable to hire more people. The firm could be growing, but if money's being siphoned off, all of a sudden we need more employees. And hey, where's the money going? We don't have enough to do this, but we're really, really busy. We're settling cases X, Y, and Z. What's going on? So it can affect, the law firm's, the owner, directly, and his or her family's just livelihood, if you will, lifestyles.
Right.
But it can also affect the lifestyles of the team members at the law
Yeah,
firm.
absolutely. So we have seen, we're a commercial lender, so we take hundreds of loan applications each year, and we say no a lot. And one of the problems we've seen is that we'll have a law firm come to us with large tax liens, and what we learn about the applicant, we can't approve them as a client because they have tax liens, but we learn that they have tax liens because the bookkeeper told the owner they were paying the payroll taxes, but they weren't really. They were writing checks to themselves. By the time this all gets discovered a ways on down the road, they might fire the employee, but they still owe the taxes, right? So
Exactly.
they get tax liens filed. That affects their credit score. That affects their relationship with either existing or prospective lenders, and can be just really devastating. They've done nothing wrong. It was the employee's fault, but the money's gone and they still owe the taxes. So it can have wide-reaching effects because, once your credit score goes down, guess what? Everything gets more expensive. You want to lease a car, you want to get a loan, all these kinds of things. So your access to capital gets dramatically restricted and becomes much more expensive. So let's talk about clients, the effect on clients though a little bit, Tim.
Yeah, the clients, and heaven forbid that if there's theft that's out of the trust account, I'll touch on that for just a
Right.
second.
Yes.
The trust account is the account that is aptly named because it is where the law firms hold money that's not theirs. So if there's theft that's happening at that level, then it can affect what ultimately goes to the client. The law firm can be liable, and the law firm, and I've seen some defalcations that where the client's dollars were the ones that actually left the firm unethically, but
Wow.
the lawyer had to make that up to get to the client. So again, reputation's a big deal, but not getting the money to the client, not having the money for them is a terrible thing. The law firm, though, is ultimately responsible.
Right, to make sure, and the lawyer and the law firm is responsible to make sure controls are in place to protect the client from employees
Yeah,
stealing from the client.
absolutely. And one other thing about that trust account, that is the account that if it's not balanced and not in line, that becomes a bar issue, a law firm regulatory issue,
Right.
and ethically that can get you in trouble, and that risks your license. So if you're not, if you don't have adequate controls on that, there's just a huge risk of the firm's livelihood.
Right, and you mentioned the good employees at the law firm. So if someone is causing problems through fraud and theft in the law firm, think about the impact on the other employees, right? Can you still employ them?
Raises, benefits, all those things. If there's not enough money, it trickles down. There's a trickle down effect of that.
Right.
Uh,
So yes,
it's obviously just not a good thing. That's why we think that adding a little bit of cost to have the proper internal controls is a very, very good investment.
Yeah, the law firm's employees are counting on it, and so are the families, the lawyers' families and the law firm's family, employee families, right?
Absolutely,
Yeah,
absolutely.
fantastic. Well, great. That's our conclusion of our prepared statement. So let us open up now to see if anybody has questions today. So there's a questions form in your GoToWebinar block. Look for that word questions, and then we'll give folks a moment or two to ask a few. Okay, here's a question. What if I don't have enough employees for separation of duties? So, a lot of law firms are small. They might have one partner and 2 employees. Tim, anything you can think of to help with that?
Again, it's a simple and somewhat trite answer. Unless it's just you have enough to have separation of duties. There are 2 people.
What do you mean?
And I really, I'm not trying to be funny or trite with that. The person who writes the checks, the person who opens the mail, yes, there's going to be a lot of trust when there's a relatively small number of people, but that doesn't mean that the owner then becomes even, more important in exercising the internal control, opening the bank statement if this other person is doing the accounting type work, having an outside CPA. Or accountant, it doesn't have to be a CPA, become involved with the internal control process on a contract basis. Monthly, they're going to do X, Y, and Z to look at the propriety of the spends that the firm does.
Yeah, that's a great
There are
idea.
some ways to do that, and again, it's important. Just because it's just only 2 doesn't mean you shouldn't have internal control.
Yeah, outsourcing is a great option now. It's very easy to do, account temps or whoever. And I would recommend that you just tell that outside contractor, here's why you're being brought in specifically for controls to help us have that, even though we're not big.
Absolutely, and again, that would be great for the other person to actually know. And just like we talked about before, of someone actually tracing an invoice through the system all the way. When the accounting office knows that there is a chance of discovery, again, it reduces their likelihood of doing something, even if it's easy.
Right. So another question is, if you catch an employee stealing, should you prosecute them?
I'll let you take that one first.
Okay. Well, so I'm not giving advice here, but if that happened to me as a business owner, I would definitely prosecute, because if you don't, what kind of a message are you sending to your other employees? You're saying, hey, steal from me as much as you want, and when you get caught, you get fired. Well, I think, just personally, this is my personal opinion, I would definitely prosecute to the fullest extent of the law. Now, that's a hassle, and that would cost money, but I think the downside of not doing that, to me, is huge. We've not discussed this topic yet. Tim, you might disagree with me on that.
No. I don't disagree. I just think, there's, it's not, I'm not trying to waver here or waffle at all. Facts and circumstances mean the most. And, but I would say 9 times out of 10, I fall on the side of prosecuting.
Yeah, agree. Yeah, and if it's something minor or whatever, or,
Yeah, and again, I'm not going to waffle too much about that. Certainly termination of employment, certainly not good recommendations. Those things, go without saying. Depending on the size and that kind of thing is where I would fall. But 9 times out of 10, yes.
And this kind of thing can be very embarrassing to the law firm, right? So they might be inclined to just sweep it under the rug and pretend it didn't happen, and might want it to go away quickly. But think about the precedent you're setting if you don't pursue that person. You're saying to your other employees, well, you may as well try stealing too, because nothing that bad will happen to you. So that's my personal opinion.
I think it does eliminate accounting firms. It can happen anywhere. No one is immune from this.
I guess you have to balance that with the negative PR of prosecuting the person. So that would be up to the lawyers to make the decision after consulting with their professionals, because this is not meant to be legal or accounting advice or tax advice today. So, hey, Tim, I think that's all of our questions that we have. Tell us about this conference coming up that I know a lot of our viewers would like to know about.
Oh, wow, great. This is on June 21st and 22nd. Our firm, Vista Consulting, is holding our annual conference in Atlanta. Um, this is what we call our attempt to look around the corner at what's coming up in the industry, what is hot topics that are going on today. We have really the trifecta, if you will, of speakers that are kind of our keynotes this year. We have a gentleman from Chick-fil-A that's going to talk about the Chick-fil-A culture, which
Wow.
is anybody's been
I love
been
Chick-fil-A.
there. It's wonderful. They call it the My Pleasure culture, which I think is pretty cool. The
Yeah.
title of his talk is "What's the Secret," which I think is really interesting. Also, another hot topic that we hear around the country is how to inspire and work with millennials. We've got a father-daughter team that's going to talk about millennials. What is the inspiration there? What are they looking for? Is it different from what our age group is looking for? Why? How can we bridge that gap a little bit? And then Don Keenan, the author of Reptile, which probably all of the attorneys that are listening know that book, is going to speak about maximizing case value and how he uses a specific template. And that was funny because when I was talking to Don about what he wanted to talk about, we talked about this a little bit, and he said, and I'll throw in a lot of other cool stuff. so
Yeah, he
so
always
Keenan's
does.
going
He's
to
great.
talk about cool stuff, and we're going to really hit culture pretty hard, but other things too. So this is kind of our look around the corner. The Vista team is going to talk about the characteristics that we see that are most common in the most successful
Great.
firms across the country. So it's going to be a
So
great event, and I hope you guys can come.
just a little bit less than a month from now. And so if you want to sign up, the URL is vistact.com to learn more about that. If you'd like to contact Tim with questions about what we talked about today or anything else, his contact information is on the screen. We'll put that also in the text below this video when we publish it on Vimeo and YouTube. If you have questions for me, this is my email address. You can call me at our 800 number here in Nashville, Tennessee. And if you'd like to know more about Advocate, here is our URL. Visit us online. If you'd like to see more of webinars like this, we do one monthly. The videos of prior webinars are available on the videos link at advocatecapital.com. Well, that's all we have for today. Thank you so much for joining us. All the best to you from both Nashville, Tennessee, and from Tim down in Baton Rouge. And we look forward to seeing you on another webinar soon. Thanks, Tim.
Thank
Thanks
you.
for being
Thank you,
here.
Mike.
All right, take care.
Okay.